33rd episode of our financial market breakdown. This is a new year and we haven't shot any video, so today, the first week of February 2020, will be our first official video of the year, a first of many that is yet to come. So today we'll break down the markets as we usually do, maybe the different style, a better touch here and there. As you know, now we're at our new premises, our new office at ICA building 17th floor. So pay a visit when you can. You can call us, book an appointment and come see how we break down the markets, and we'll talk to you more about our financial hub course. Apart from that, Ken will take it from here.
So yes guys, we're now back to markets. We'll be doing the videos consistently, and if you are expecting some videos, turn on your notifications, so we'll be dropping videos. So I'll dive straight into what is affecting markets right now. One, we have the coronavirus in China, the biggest threat we have to knocking off markets. So last week we saw American markets being knocked off. I think global stocks went south, and much of the move was predicated on the coronavirus outbreak which has happened in China, now has spread to Hong Kong, 20,000 cases, over 425 deaths. So when such things happen, the first thing you try and do is you look at historically what happened when such an event took place. So if you look at history, the last event we had an event in 2016, never had a big impact, it was tamed really early on. But in 2003 we had an event, the SARS outbreak, and if you watch news, if you try and read history, you'll get that even health experts are trying to compare the SARS outbreak, which was in 2003, with the coronavirus, which is currently taking place in 2020. So in 2003, some of the assets that were hugely affected, oil, for example, had a 20% drawdown. So we had a collapse of 20% in oil in 2003. The outbreak lasted 7 months. So from June in 2003 to 2004, I think, we had that outbreak. Or in 2000, yeah, I think that was the date. You can confirm the date, I'm not sure, but it was around that period. And we also had global stocks falling by 20%, so double digits. So will this pandemic result into the same effect? We are not yet sure. Currently, the People's Bank of China injected 21 billion into the markets to try and bring back liquidity, because economists are estimating that we might probably get a slowdown in China for the first quarter in GDP figures, because most of the places in Wuhan, which is a manufacturing hub in China, are closed, and we know the Chinese economy is mainly reliant on manufacturing. Again, knocking off the Chinese economy will have a big effect on the global economy, since they are the second largest economy in the global economy, and they contribute 16% of the global GDP. So those are big figures, which if you knock off, you're likely to knock off the global markets. So what do we think of markets? Oil, we are currently short, and over the last 1 month, we've seen oil lose 10%, collapsing all the way from 65, and we're currently trading at the 50.5. What do we expect? We expect lower prices. We'll show you on oil, on the charts. The dollar, we don't expect huge effect unless it continues seeping in, because we don't know if it will be contained. The Chinese are really working hard to see if they can contain it, and they're fast people, they're hardworking people. So when you get such productive people working on such problems, you're likely to get a relief, or you're likely to get a cure to some of these things. So in the markets, we'll tackle some few pairs. We won't do all the pairs we have. We have some trades running in, and we shared some of those trades in our group. If you're not in our group, we'll drop the links below so that you can be able to join the group. And probably we share the trades. Hopefully you look at the trades, monitor how we break down the markets, learn a lesson or two, and wait for the next video and other videos which will be dropping coming soon. So we'll just go straight into the chart breakdowns and start breaking down the charts.
So yeah guys, now we are down to Aussie dollar. Aussie dollar, as you know, this is one of my favorite pairs. I love trading the antipodian pair. And one thing you need to keep in mind as we go down into this pair is that Australia is a huge consumer of goods from China, and you know what has been happening in China. There's been an emergency shutdown, no flights going out, no people going in, everyone is being contained within the country. So that is a huge hit when it comes to Australian dollar. And we'll go later on down to USDCAD, which is a major currency which is affected by oil, and Ken will cover oil, and you know what has been happening to oil due to China. So this China issue, the coronavirus, is hurting a lot of economies, and we'll look at that, what is happening on the charts technically. So if you look at the charts, This is a bigger time frame. If you saw the analysis I did yesterday on our website, which I leave the link below, I covered the bigger picture on Aussie dollar. What are we seeing? And I do that every year when we start, and after 6 months I'll do it again. What are we looking at? Mainly we've been in this downward triangle, that formation. We've been respecting it, following Elliott waves. And if you like to understand Elliott waves, you can purchase our course and we do that more in depth. But for now, on our analysis, I'll just show you a brief of how I analyze the market with it. So if we look at the Elliott wave analysis, we've been within this beautiful downward channel. If we expand it closer and look at that, so beautifully respecting the ABCD. So this is a downward expanding triangle, and right now we are forming a base where the market hasn't dropped below this level for the past since August 2019 last year. So we've been finding base at this level, but the market right now is falling with a lot of momentum, and we're being pulled to that E level on our Elliott wave analysis. So we might see a short pullback from this point and a further movement down towards the levels of 0.650 level. So if we go down to the daily chart, that was the weekly chart. Looking at the daily chart, you can see that beautiful still Elliott wave analysis. I prefer looking at Elliott wave analysis because it gives me the bigger picture. I can know in advance where we're expecting the market to reach and where can we get pivot and turn. So looking at this level, we reached our target beautifully at 0.6685 level, and market has been finding base, and now we are seeing a short-term pullback to the upward side, and we can see a further movement down. So if you go down to the 4-hour chart, this is what we get, a beautiful analysis. So that A, B, C, D, E movement to the downside. So we're respecting that channel formation, and if you look at it closely, within that channel formation we have those formation of triangles within the channel formation, which gives us a better indication that the market is about to turn. So why didn't we turn at this level? Because the Elliott wave triangle, downward triangle, wasn't complete. So we can see at the E level down here, if I expand that, we found a bit of consolidation, but that was a beautiful analysis. I shared this on our website yesterday, our technical analysis, and I gave this example. So we are looking for a pullback further up to around that level, where we might get another we might respect the downward triangle, the downward channel in line with the downward trend line, and then another further movement back down. So that is what we're looking at right now at the moment. I'll keep you updated on our website, but mainly we're waiting for that pullback to the upside and a further movement down. So that's what's showing it from the bigger picture using top-down analysis, which we also teach in our Financial Hub courses. So if you're able to purchase any of our courses, we'll take you through the top-down analysis as well as bottom-up analysis, seeing the bigger picture and breaking it further down, expanding it. So that's basically what I have on Aussie dollar, and maybe we can look at USDCAD. USDCAD, one of my favorite pairs, best performing pair of 2019, as well as Aussie dollar, and we've been following this pair ever since the beginning of our trading career. And looking at this pattern, we can see on the bigger picture, this is the weekly chart, following the channel formation, beautifully being respected. If we zoom that in to look at it more closely, we can see that we've been respecting that formation of at that level. We can see that sort of a small channel, which if you go to the daily chart, just to expound on it and look at it more clearly, we can get that formation. This is what we get. So there's that triangle formation which we've been respecting, and if you use our Elliott indications, that A, B, C, D, E. So if we respect that, that's what we had at first. We can see that the market beautifully respected the triangle formation, and we hit our E level at the bottom. Then the market has been going up. If you take our Fibonacci sequence and plot it from down here, you can see we beautifully respected 78.6 Fibonacci level, and the market has been shooting up ever since. My main bias on this pair was mainly a downward movement to the, if you watched our videos last year, I was mainly short the whole of last year, but looking at it the beginning of this year, USDCAD has a lot of correlation with oil, and oil has been falling off the sky, and in relation to that, the USDCAD has also been catapulting to the upside. So you keep an eye on that. Fundamentals change. The market is not always constant, so everything is normally changing. So looking at it now, I've been bullish since the beginning of the year, and we can see the market has been going up. Breaking it down to the 4-hour chart, just to look at it more closely, this is what we've been getting. Once we got the bottom there, the market has been moving up respecting Elliott wave analysis. So as you can see, we had an impulse correction, ABCD E movement according to Elliott wave. Then we had another impulse to the upside, and we got that wedged diagonal triangle to the upside. And I had a short bias on this trade yesterday. If you go to the 2-hour chart and just expound on that inner triangle, remember as I said, top-down analysis, we go from the bigger time frame down to the lower time frame, expounding on what is happening. So when we go to this E level, I had a beautiful formation over here, which I was expecting a further movement down, especially after touching 78.6 Fibonacci level. So I was expecting it to move down, but you know, things change, especially due to oil. Those are oil surge yesterday. The market fell further down, and this propelled this pair to move further up. So it was okay. It was a loss I took, but we're still looking for further a clear picture, clear analysis on this. So for now, I'm out of the market, mainly focusing on Aussie dollar. So that's basically what I have today. Look more into USDCAD, do better analysis on our website, and I'll keep you updated. Next week I'll do a follow-up on it, and maybe another pair as well. So that's all I have for now, and I'll leave the rest to Ken. So guys, if you want to understand how to use the Elliott wave analysis, you can come and visit us here at ICA building, and we'll take you through our course packages, which will help you understand how to use them, especially the professional course and the legendary course. We also offer it on our Forex masterclass, but it is more in-depth on the other courses. So make sure to come visit us.
So yeah, I'll start off my analysis with oil, the asset which has been knocked off by the ongoing virus. And for this one, I'll do a quite different approach. I'll share with you one of the best approaches that we use. You can only get this one once you purchase our course, but I'll try and show a snap of what you do for us to arrive at a trade idea. So this is oil on the monthly chart, and on the monthly chart, oil is trapped in a triangle. So we had this drop which happened 10 years ago in 2008, dropping all the way from 140, which was the highest price that was gotten on oil for a very long time. We had a collapse down all the way to $35, a recovery which was capped by the $114 mark, and a drop again to $35 mark from the $114 mark. Again, we had a pullback which was capped by the $70 mark, and we had a drop again to 45, a pullback again to $70 mark, and now we can see a drop. So what do you expect long term? In the next 2 to 3 years, you expect oil to at least trade at the $35 mark or the $30 mark. If the coronavirus keeps on going on, and the Chinese have declared that they won't be demanding oil anymore because they don't have manufacturing farms running. So we had a 20% decline in the demand of oil. OPEC said they'll be having an emergency meeting this week. We're still looking forward to that. Will some countries agree to again cut production? Because in December we had production costs to boost prices. But will they agree again to cut production? We're not yet sure. If they don't agree, we can expect oil to sink lower. So long term, we're looking for $35 mark. On the way to the $35 mark, a lot can happen, a lot can change. So we don't hold on to trades with that bias. Going into the weekly chart. So on the weekly chart on oil, you can clearly see that over the last 5 years, so from 2016, we had a bull market from the $30 mark, which was capped by the $75 mark. Then we had a collapse all the way to 45 and a pullback to touch 65. A consolidation between 65 and 50, which lasted almost the whole of last quarter. So it lasted 2019 all the way to 2020. In the beginning of 2020, we had the oil, US-Iran tensions, which spiked oil at 65. But after that spike with the coronavirus, you can see clearly over the last 4-5 weeks, oil has been moving lower, and I expect it to continue moving lower. So at least expect a drop to touch 48.8, 48.7, 47.5 ultimately, before getting any pullback that will take us back higher at least to 57.3. So for now, I'm short on oil. I expect to be supported at 48.8, 48.7 first, and then 47.5, which is slightly 80 pips lower than what I'm saying on the weekly chart. So that's my bias on oil on the weekly chart. On the daily, no pattern to be precise that can give us a clear indication. So yeah, currently you can see $50 mark trying to act as a good level of support, but I don't think we'll get enough bullish momentum to propel us higher unless we get a close above 52.5. I'd still bet my money short. I think it's better to stay with the trend rather than to be a contrarian at this point. At this point, I'd be okay being a contrarian, but at this point, I don't think I'd want to be in a long position on oil unless we get the emergency meeting and oil again we get production cuts. If that is the case, then I may be looking for long opportunities. But till then, with 20% demand gone from Chinese, I don't see any move that will take us above 52.5 on oil. And so for now, I'm short on oil. I expect it to continue moving lower, at least to 48.7 as I said earlier, which can be clearly shown on my 4-hour chart. So yeah, you can see I actually have a position on oil. I've been riding it lower. Yeah, so you can see we capped into 50. Probably will be capped by this level 51, and then we'll get a continuation to 48.8 during the US session. So let's wait and see. During the US session, we'll see how the market performs. A move above S1 will probably take us here to P, but still, I wouldn't be comfortable being long on oil at this point unless you get a change in trend direction, which can only be signified by a close above 52.5. So that's my bias on oil, and I'll now do the next pair, which is pound. So the next pair that I'll be looking at is GBPUSD, the pound pairs, and the outlook I'll give out on the pound will currently sip in all pound pairs. So what I'll be talking about will affect GBPAUD, GBPJPY, and GBPUSD, because much of the moves that are moving in these pairs are not predicated on the other pairs but on the GBP pair. So yesterday we saw a collapse, a big collapse, almost 200 points on GBPUSD, 200 points on GBPJPY, and 400 points on GBPAUD. This came after Boris Johnson said he wouldn't accept the EU trade deal that was offered on Brexit. So we know the Britain left the European Union. On Saturday they signed the deal. They're out of European Union for now, but they're still signing the trade agreements. If they don't get good trade agreements, then we may see a knockoff affecting markets and pushing markets lower. But I think it's still too early to conclude that they won't settle for a deal. It may take longer and markets may keep on moving up and down. Volatility may come in, and it's pretty hard to know the outcome, but we'll try and play along with what will be happening on the markets by looking at our technicals. So you can see for the last quarter of 2019, this is my weekly chart. For this one I won't go to the monthly chart. For the last quarter of 2019, pound settled, it bottomed at the 1.20 mark. From then, after we had some bright side coming into the markets when Boris Johnson was elected and it looked like we'd have a good Brexit, we'd have Britain leaving with good deals, the pound started moving higher, and you can see a move higher all the way to 1.35 before the end of the last quarter. So most people are bullish that Britain will do well if they leave the European Union, because they believe before that Britain was not in the European Union and they did well. So we don't see why they won't do well this time, especially since they have good policies. And you can see the market is ahead of reality, and it's already reflecting that. Currently, when you look at the weekly chart, we are trading at the 1.30 mark, and we have hovered around this level for the last 1 month. For the last 1 month, the pound has been settling, moving around between 1.3150 and the 1.30 mark. For 5 weeks, I've seen the pound bouncing off between these two levels. I am waiting for a clear breakout to decide the ultimate direction on pound, but I'm bullish. 70% bullish, 30% bearish. Why? I believe the dollar is going down, so I'm not doing the dollar breakdown, but if you go to our site, you'll get links on how I give out the dollar updates and I expect the dollar to be moving lower. Technically, it's printed that we could be getting a move lower, and on the pound, technically also we are getting a probable move lower, because you can see clearly the 1.3 is acting as a good support level. A move below P on the monthly chart, on the weekly chart, will send us lower all the way to 1.23. If that happens, I'll also pivot very fast and come in short, but I don't see this happening unless we get a good break below the 1.2960. That's how I move from long, from bullish to short. On the daily chart, this is my representation of what is happening. So yeah, you can see clearly for the last 5 weeks, like I'm saying, pound has been moving from the 1.2750 and the 1.35. Not much has been happening, just a straight consolidation. And for the last 20 days, which is January, you can see we are hovering between these two levels, 1.3250 and the 1.30 mark. So yesterday we had this collapse, which was predicated and catalyzed by the Brexit release news, and it was supported by the 1.30. So today morning I came in early in the office and executed a long trade. Currently I'm in loss, but I don't expect this to move all the way to my stop loss. I expect the S2 mark to support. I expect this was a short squeeze, and you may be getting a move higher to above S1 and probably a move higher to 1.33, 1.34. If you get a break of this, then I'll be looking for the 1.275 mark, but at least wait for a daily close, not a 4-hour close, a daily close below S2, which is the 1.2965 mark. So I won't even go down to the 4-hour chart for this one. I'm bullish unless you get a close below S2, which will mean I pivot tomorrow early in the morning or today late in the sessions, maybe during the New York session. But I'm still long. I expect this one to come higher, to move higher all the way to R2 and R3 1.345 at least before the end of this month. So that's my outlook on pound. That's my outlook on oil. Those are the two pairs that we'll be doing today. For other updates, go to our site, visit our site. If you want to learn more on what you're doing, the concepts that you're using, please check out our course. We have other things that you're using, like trend lines. I'm not showing you how we draw trend lines. Like I never drew any trend line, key levels, how we mark them and arrive at trade decisions, and how I actually arrived at making the decision to buy the pound and why I did it. So if you want to learn this, you can take one of our course packages, come and learn from us, and it will be an interesting experience. So that's all for now. We'll see you next time. See you next week when we do updates, when we look at the trades we're giving out and how they were played out. So that's all. Cheers, guys.